Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Shoshana Winter. She's the Managing Director over at Into. We're going to take a look at some GenY investing trends and also alternative assets. It's great to have you with us in studio. Shoshana, welcome.
Thank you.
And GenY, we're starting to pay attention because they're really going to start driving those economic decisions. Who is GenY?
So otherwise known as millennials, which is everyone's favorite catch term. So they're the largest generational cohort we've had. They beat out baby boomers. There's about 75 million of them. Depending on who you ask, they're aged anywhere between 22 and 38 years old. And so to your point, they're about to be responsible for one of the largest wealth transfers in history. I think it's something like $30 trillion. Some of that is their parents transferring that wealth to them, and some of that is also they're reaching a stage in their career where their earning potential has gone up a lot. So there's much more that they have available to them to invest.
All right, now what are some of the trends that you're seeing?
So the one thing to remember about millennials or this generation is that they are the first generation to really grow up with the internet being just a thing that always was. So there was no learning curve. And so as a result of that, this is a generation that has a built-in expectation for things to be easy, transparent, online, 24/7, on demand. So the question then becomes, how does that apply to investing? I think what we're seeing is this is a generation that feels very comfortable with alternative assets, feels very comfortable not working with a financial advisor, really being on a more DIY kind of path, and working with technology platforms like ours, where they really have transparency into what they're investing in.
Right, and it's interesting because with Into, it's a premium real estate investment site available to accredited investors. That's kind of that alternative asset space where you're looking for different kinds of returns outside of equities, outside of bonds, and traditionally that has not been accessible.
Right, so that's an excellent point, and what's really interesting, since we're talking about millennials, is that this is a generation that feels very comfortable with alternative assets, because a lot of them came of age seeing a lot of what happened to their parents in 2008, et cetera. And most financial advisors would advise you to take 25 to 30% of your portfolio and put them into alternative assets. We're focused on commercial real estate, and it has traditionally been a category that has delivered incredible returns, much more so than some of the traditional asset classes. So we're finding this perfect sweet spot between these millennials coming of age, coming into their own financially, and their desire for platforms that are transparent, easy, and give them access, as you said, to this asset class.
Some of the challenges of real estate investments and other alternative assets is liquidity and access to their capital.
Yes.
How do you work with that? What if they do need that instant access?
So that's a great question. So we've really built Into for this new class of investors. So with that in mind, most of our deals are at a 3-year horizon. We are beginning to look at deals that are maybe up to 5 years, but for the most part, somebody could put their money in and sometimes could see a return. Besides the cash-on-cash distributions that they're receiving every single quarter, they potentially can even come out 18 months after. So each one of our contracts on our deals is a minimum of 18 months and a maximum of about 36 months. So they get the liquidity.
And then they're getting it, for lack of a better term, a dividend.
Exactly.
Yes.
Quarterly. Cash-on-cash distribution on their investment, as well as the yield at the end, which we have, our model has delivered. We're on average 16.63% average annual yield, which is much better than what people are seeing on their IRAs and mutual funds.
Especially as we're looking at a historically low interest rate environment, which might get lower in the next couple of cycles. So that's interesting to hear, Shoshana. Thank you so much for joining us at MarketSite, and thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.